Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite is Ed Egilinsky. He's the Manager Director of Head of Alternative Investments over at Drexion. Thanks so much, Ed, for joining us on set at Nasdaq. And let's talk about commodities. Been kind of quiet in the market lately, but what are you seeing in terms of flows into physical commodities?
Well, I think commodities as an asset class have underperformed until the last year and a half. Right now, they're trading at roughly 50-year historic lows relative to the S&P 500. So from a relative value standpoint right now, commodities are still cheap, despite the fact the last 18 months they've started to rebound. A lot of that's attributed to inflation. You're seeing it with the CPI numbers and GDP. You're seeing global growth starting to pick up, particularly in the States.
Why would you say it was weaker over the past 18 months relative to the rest of the market?
Well, I think, commodities actually have shown a positive return over the last 18 months. It was the previous 10 years to that it was a decade of a malaise with commodities. So over the last 18 months, it's really been led by the energy complex, and in our case, cotton as well. The metals and the grains in particular have underperformed. Energies has led the market.
What individual commodities do you think could potentially be impacted by the trade wars?
Well, with the trade war, soybeans definitely, particularly with China. And indirectly, you could have the industrial metals, copper in particular. There was a drop in emerging market equities. There's a good tie between emerging market equities and commodities because they're big producers and consumers. So the industrial metals also have been lagging as well. Energies have been pretty immune to it as a result of the fact that OPEC has probably been the biggest driver for energies, and it's led the market higher because of the supply-demand.
So in the balance of the year, would you say that the opportunity exists in the energy complex, or are there other areas that you're looking at?
Well, we believe in broad diversification when it comes to commodities within a portfolio. So we have an ETF, COM, that is a broad basket of commodities made up of energies, metals, and grains. But the one differentiating aspect to it is that it's not 100% long all the time. It's long those commodities showing a favorable price trend, and in cash with those commodities showing a downward price trend. So as I mentioned, right now we're not in the metal complex, copper, gold, and silver, as well as corn and soybeans, because of the fact that they've shown a downward trend recently.
Now, a number of the ETFs over at Drexion are levered. Right, and sometimes there's a connotation associated with lever that it could be risky. Help us dispel some of the myths and the facts with that.
Well, we have a series of different leverage points. So let's start with triple leverage. Triple leverage products are designed for very short-term trades, intraday, maybe a day or two at most. Then we have lighter leverage type of products that are like 1.25 leverage on different benchmarks. Those are geared for clients that either have an opinion on the market short term or may want to hold for a longer period of time because of the light leverage point allows you to do so.
All right. And what would you say some of the challenges or hurdles that clients face when they invest in a commodity ETF or a commodity hedge fund?
Well, I think one of the things that you have to look to, whether it's a single commodity or a broad basket, is the futures, how they execute the futures. There's something called contango, where you're rolling into higher prices. That's not good if you're long something. So one of the things that you want to look for, whether it's a broad commodity basket or single or sector commodities, is that they have what's called the smart roll yield that takes into account that contango or what could be bad if you're long something. And our vehicle, COM, does that, has a smart roll yield. All
right, and to wrap it up, what are some of the ways that you would recommend retail investors to introduce or expose themselves to commodities in their portfolio?
Well, I think MLPs, we have an ETF, ZMLP. It's a broad MLP basket of mid, up, and downstream. And for those real short-term tactical trading advisors, we have triple leverage type of bull and bear products such as ERX, ERY, which is the bull and bear, respectively, of the larger energy stocks. In addition to that, very popular is the triple leverage gold miners, which is Nugget, NUGT.
Yeah, very popular trading vehicle.
Yes, that's for sure.
All right, so again, and those are the type of investments that we look for, very short-term, tactical trade.
Anything triple leverage, you should be looking at intraday or very short-term in terms of a day or two at most.
All right, well, thank you very much, Ed, for joining us at MarketSite.
Thanks for having me
you back.
Have a good weekend.
And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.